Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Acv Auctions Inc. Annual Report. Acv Auctions Inc. offers a wide range of services to facilitate business-to-business, used vehicle sales between dealerships. The company's platform provides a digital marketplace for auctions, allowing buyers and sellers to connect and conduct real-time transactions. In addition to the auction service, Acv also offers several value-added services, including transportation quotes, short-term inventory financing through Acv Capital, and customer assurance services through Go Green. The company's remarketing centers provide additional services such as vehicle reconditioning and storage, catering to commercial partners like fleet, rental car, and financial sector consignors. Acv also offers data services, including the True 360 report, which provides comprehensive vehicle assessments, and the Acv Market Report, which offers transaction data and pricing information for used vehicles. Furthermore, Acv provides data and technology through inspection services, such as condition reports and virtual lift solutions, as well as marketplace enablement tools like MyAcv application, private marketplaces, and programmatic buying service. The company's inventory management software, Acv Max, enables dealers to manage their inventory and set pricing while turning vehicles. Overall, Acv Auctions Inc.'s comprehensive platform provides a one-stop solution for dealerships looking to buy or sell used vehicles, with a range of services designed to streamline the process and provide valuable insights into vehicle condition and market trends. The stock price of Acv Auctions Inc. has crashed by over 67% in the past year due to a combination of factors. One major contributor was the company's consistent failure to meet earnings expectations, including missed forecasts for revenue and EBITDA guidance. This was compounded by the company's cautious financial guidance, which often fell below analyst projections. The wholesale automotive market has also presented significant challenges for Acv Auctions. The company cited a flat dealer wholesale market and deteriorating margins as major concerns, leading to an initial stock drop. Furthermore, the company faced increased credit risks due to the bankruptcy of a customer named Tricolor, resulting in an $18.7 million provision for credit losses. Analyst downgrades and price target reductions also played a role in the stock's decline. Several analysts lowered their price targets and downgraded Acv's stock rating following disappointing earnings results and increased competitive pressures. The company's guidance for 2026 also fell below analyst projections, indicating a potentially decelerating growth and a flat dealer wholesale market. Overall, the crash of Acv Auctions Inc. stock price can be attributed to a combination of missed earnings expectations, cautious financial guidance, a challenging wholesale automotive market, and increased credit risks. These factors have led to a significant decline in the company's stock value over the past year. Acv Auctions Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $5 billion. Acv Auctions Inc. trades at a higher price-to-book ratio of 2.25 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 55% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be identified through an analysis of its financial performance over various periods. In this case, the data suggests that revenue growth is driven by several key factors. Marketplace and service revenue has consistently increased, with a notable 14% jump in 2025 compared to 2024. Auction marketplace revenue also saw significant growth, increasing by 65% in 2023 and 14% in 2025. Additionally, other marketplace revenue experienced a 25% increase in 2025. On the other hand, some factors have contributed to revenue decline. Stock-based compensation expense decreased from $73,526,000 in 2024 to $64,464,000 in 2025, while fair value of awards vested also saw a decrease. These reductions may impact revenue growth. The company's financial performance has shown improvement, with net loss attributed to common stockholders decreasing from -$72,565 in 2024 to -$66,141 in 2025. The weighted average number of potentially dilutive shares excluded from diluted net income loss per share computation also decreased, indicating a positive trend. Overall, the company's revenue growth is driven by increasing marketplace and service revenue, auction marketplace revenue, and other marketplace revenue. However, decreasing stock-based compensation expense and fair value of awards vested may impact revenue growth. The net income of the company experienced a significant change between 2024 and 2025. Initially, it decreased from -$79.7 million to -$66.1 million, indicating an improvement in financial performance. However, this trend was disrupted by various factors, including the bankruptcy of Tricolor Holdings, LLC, which led to a decrease of $18.7 million in net income. The company's profit margins also underwent changes during this period. Initially, they were adversely affected by credit risk, fraud risk, and settlement risk. Additionally, inefficiencies in promotional advertising and marketing programs contributed to their decline. However, the profit margins improved due to an increase in revenue from sales of equity securities and a reduction in litigation-related costs and Tricolor bankruptcy losses. The reasons for these changes are multifaceted. The exclusion of certain items such as stock-based compensation, expense, and amortization of acquired intangible assets also contributed to the improvement in net income and profit margins. Furthermore, the company's revenue from sales of equity securities increased, while litigation-related costs and Tricolor bankruptcy losses decreased, leading to an overall improvement in financial performance. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. As evident from the data on page 57 and 58, the company has achieved positive operating cash flow for the year 2025, with a substantial amount of $78,232 recorded. This achievement is further reinforced by the net cash provided by operating activities, which also shows a significant increase to $78.2 million in 2025. This indicates that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. The company's debt level has undergone significant changes over the past year. The maximum borrowing capacity under the revolving credit facility increased by $90 million, while warehouse facility borrowings also saw a substantial increase, with a maximum borrowing capacity of $200 million after an amendment in December 2025. Long-term debt and total liabilities have also risen significantly, increasing from $123,000 to $190,000 and $544,145 to $655,928 respectively. In terms of interest expenses, the company has experienced a notable increase. Total interest expenses rose by $5,376, with an even more substantial jump in interest expense as a percentage change, reaching 127% from 2024 to 2025. The interest rate on warehouse facility borrowings decreased significantly after the amendment, from 6.71% to an average of 2.75% plus term SOFR. This decrease contributed to the increase in interest expenses, which saw a rise of 134% over the past 2 years. The company's financial performance varied across different segments and regions. On the positive side, revenue saw a significant increase from $637,156 in 2024 to $759,636 $606 in 2025, indicating growth in certain areas of the business. However, other metrics paint a less rosy picture. Loss from operations increased in 2025 compared to 2024, albeit at a lower rate than in 2023. This suggests that while revenue is growing, operational costs are still a concern and may be hindering profitability. Management's primary focus is on building a trusted and efficient marketplace for buying and selling used vehicles. To achieve this goal, the company will leverage technology to power its digital marketplace and data services. This approach aims to provide a transparent and streamlined experience for customers, increasing confidence in transacting digitally. The company expects growth in marketplace GMV as marketplace units grow, with increasing units being a key driver of revenue growth. Management plans to focus on growing its share of wholesale transactions from existing customers, increasing their engagement and spend on the marketplace platform. As the business scales, management anticipates an increase in costs, including marketplace and service cost of revenue, operations and technology expense, and selling, general and administrative expense. However, these expenses are expected to decrease as a percentage of revenue over the longer term. Management is confident that its differentiated approach to vehicle insights and comprehensive suite of products and services will continue to attract new customers and retain existing ones. The company's nationwide coverage and ability to build vibrant local and regional networks will also contribute to its growth strategy. The company's financial strategy has been focused on retaining earnings rather than distributing them to shareholders. According to the extracted summary, there is no mention of the company paying dividends, indicating that they have chosen to reinvest their profits within the business. Furthermore, the absence of any reference to share buybacks suggests that the company has not utilized this method to return value to its investors. There are concerns about inventory buildup or supply chain disruption in the market. One potential issue is a decrease in the supply of used vehicles coming to the wholesale market, which could impact sales volumes and revenue. Another concern is the risk of supply chain disruptions due to interruptions in systems that affect the availability of inventory on marketplace platforms. This could be caused by various factors such as website downtime or financial difficulties faced by third-party web hosting providers. Additionally, there are potential impacts on inventory buildup due to an increase in new vehicle supply and higher interest rates, making vehicles more expensive for consumers. These factors may lead to a decrease in demand for used vehicles, potentially affecting the market's inventory levels. That concludes the financial summary for Acv Auctions Inc. Feel free to comment below, and I will be happy to answer them when possible.